Guys, welcome to March 24th. So today is Friday, the last trading day of the week. So we'll kind of share the four signals that whether or not the stock market will be crashing right now. Because we see 3 days ago the stock market is pretty crazy. It went down a lot. So last night I thought there was a little hope, so that I started want to buy back more stocks. But before I wanted to do that, before I sleep, I thought that maybe in the midnight the market will turn around. So as I said, same as what I thought, the market was going down, and Nasdaq was closing at 5,800 level, and Dow Jones was pretty bad because it was pretty good before I went to sleep, because we're in Hong Kong, right? So, and in the end, you know that the market has been the closest really low. It's closed at 20,656. That's pretty bad. So the signal turns bad. So right now we kind of examine the last trading day of the week. We examine the four signals whether or not the market is going to be bad again. So in the Eastern market, for Shanghai, Hong Kong, Taiwan, Singapore, and Malaysian markets, they're all doing pretty bad, except for Japan and Chinese market, Shanghai index. So those indexes were doing pretty good actually. So I'll tell you that why is this happening, and how does it influence the US market today. So right now, before the markets open, we can see that with the futures, we can see that generally the market's indices dropping. But if for those who are going up, that are going up, is kind of just a little change. They're not significant change within the indices for now. But we can see that the signals, the terrifying signals, are still on. The gold is pretty good, but it isn't going up, but it's going down just a little bit. So this turning not as bad. But you can see the US dollar, as you can see, the highest point today is hitting 100, and then it comes back right down, and now it's 99.64. So how does that have to do with the stock market? So it will pull out. It means that the money is pulling out of the United States. So the US indices will be lack of capital, lack of money, and the stock indices will be easier to drop and harder to go up. So right now you can see, as we talk, is turning pretty bad. So we can see this is a bad signal for US. So with the US is going weaker, the Japanese yen will go stronger definitely. So globally, in the global market, will be going down, will be adjusting only and solely because of the US dollar is turning weak. So as we speaking right now, so the last swing is VIX. So VIX is not pretty bad, but I would say that now 2 out of 4 signals are still pretty bad. So if the trend by default is going down, you will see the stock market will be doing pretty good, pretty bad. So we will see that. So where does the money go? So there are a few signals we can check. For example, the first one, we have recorded a video. You can check these 2 signals and you can learn it, and then you can start doing your own homework. For example, you can see if it goes to Taiwan, you can see the Taiwan the forex. So you can see Taiwan, you can see the money is flooding into Taiwan. So Malaysia is pretty good also. The Malaysia is kind of going stronger. So the money is showing a signal that money is going to Malaysia also, but not as good as the Taiwan market. So Hong Kong dollar, so you can see it's really weak. So money isn't going to Hong Kong, and you can check this Singapore market. So you can type this, so you can see it's pretty good right now, but kind of there are a few ways that money is leaving Singapore, but the strongest one are Taiwan and the Malaysia market. So for the Chinese yuan, you cannot use the same signal because the currency is kind of not, I cannot say it's manipulating, but it's kind of limited within a range, so you don't get too many signals out of this data. So you can see the second signal, you can check the M1. So you can see the United States. So you can see, as you can see, the US dollar is getting weaker. So that's one signal, money is leaving the United States. The second one is the last M1, the data is lower than the previous one. So the M1 is not too bad, but it's kind of stable right now. But as you can see, the US dollar is getting weaker. So you can see in general, the money is leaving the United States market. So the housing markets, the stock markets, and the bond markets may adjust a little bit, especially for the stock indices, because it has risen a lot, really a lot. So healthy adjustment is really healthy. So we can seize for the opportunity. So you can seize the opportunity and then buy back our shares and we invest again. So where the money goes, so you can see in China is not doing pretty as good as the United States in the short term, but in a longer one, it's really good, the Chinese market. And the Hong Kong is doing pretty bad these 2 months. And then you can check the Taiwan, the M1 is pretty bad. So the currency rate and also the M1 together, you can find if you can find strong signals in both of them, then that market in short term to mid-term wise, it will go up. But in longer term wise, in a macro sense of point of view, you can see because of the theory I asked you to check is the video I recorded last time is the interest rate cycle and the expansion actually yield a positive return, positive correlation. So that means that in the longer one, or even the indices will adjust. After the adjustments, they will challenge and hit the new high again. So that is the fact. So right now you can prepare. That means that in conclusion, you can prepare your money, and when it adjusts enough, then you can start purchasing your first house or your second house or some of the stock markets, because the stocks are pretty much more liquid than the housing markets, right? So liquidity is pretty high. So it's higher than housing markets. So this is something that you can prepare. But if not, you don't know anything about it. So now you can start to learn some of the signals that how you can benefit from the stock markets and commodity market and the forex market. So you have more tools around yourself. So when chance comes, you have that tool. So when the chance comes, you don't have that tool. That's another story, right? So then we can find this chance, learn the tools, and we can start earning for this time or the next cycle, whatever you want. So right now we can accumulate our knowledge for now. So in conclusion, you can save your money, and when it adjusted, you can start buying, investing stocks and housing markets, for example, etc. So now you can get a general point of view. If not, you don't understand, you can buy the gold, because the gold is pretty good right now. So when gold adjusted, have a chance to adjust to 12.10 or 12.20, then it might be the chance you can kick into the market, and the gold market may hit 12.70 to 12.80. So this is the fifth suggestions that I made to you guys. So I'm not sure if you're following the previous four suggestions, but the fifth one I'm coming up right now. So if is it going to adjust here and then go up? Not necessary. So if you see any candlestick pattern that challenges the new high and hit the new record, that means that the pattern, the trend is pretty good. So you might as well just kick into the gold market. So that means that, with that being said, that means today is the day that we will become more pessimistic, or next week or few weeks after. So by the trends and technically, it will say that not now. If it is not now, it will be 2 or 3 weeks later. Then we're experiencing an adjustment. That's for sure, because the stock market is pretty high. But it's not necessary from your mind. Your mind telling you that's high. That may not be the case, because if there's no statistics, there's no data, there's no proof, everything is only in your head. So what's preventing you from being successful is your head. Sometimes it's always your mentality. So if it goes up higher, then today is not anywhere high, right? Because you look at the stock market, it's pretty crazy, right? It has been pretty crazy this few months after Donald Trump has been elected. That's totally out of the blue. and out of our anticipation that Donald Trump will be the president and the stock market the Dow Jones will raise from 17,000 to now almost 21,000 level. Who told you that? Who knew that? You tell me. So if you think, oh, the 2,000 level is the peak, then right now it's 21,000. Is it a peak? It's pretty cheap. If we adjust it back to this level, right? So you really have to process the data and really have to separate your left brain and right brain, right? Someone said right brain has nothing left brain has nothing right, some kind of stuff. Okay, all right. So you can check the 4 signals, and hopefully I wish you good luck for tonight. And I'm telling you some kind of homework and preparation definitely you can do for tonight. Otherwise, before that, I'll see you next time. So Monday is again the animation education video. So I'm preparing more updated and sophisticated analysis for this housing market. So if you like, I kind of see many comments going on right now. I have no time to reply it on time, but I promise you I'll reply each of your comment one by one. So please leave me a comment, smash like button, and share to your friends. And not to forget to subscribe my YouTube channel and the Facebook channel as well. So if any questions or suggestion even, so you can leave me in the comment box. Show me some love in the comments below. So I will see you next time. Bye bye.